Hello and welcome back to another episode of Pip Chasers from Rebirth Holdings, something that we'll be bringing to you every single week, technical analysis for the week ahead. So literally just want to start off with, you can find all of our information on our website, rebirthholdings.co.uk. Also links to the Rebirth YouTube channel and also links to myself and Nathan's trading views for our articles that we do on a weekly, daily, monthly basis. But as you can see, all the videos are up there for you guys to look back on for technical biases, technical experience, there for you to use. So guys, just to recap, going off last week's episode with Nathan broke down the pair Aussie US dollar. Now, Nathan had a great setup on this. He was looking for his trend line break and he was looking for movement, as you can see, to the downside here. Now, just to finish up and wrap up last week, let's see how that played out. Nathan's trade started here. If you go back and watch it, he was talking about the 2 o'clock closure. As you can see down here, 2 o'clock closure on the 10th of June. I also watched this pair, Aussie dollar, as well. So as you can see, I have the setup as well. You've got that outer trend line, the inside trend line. But ultimately, Nathan had this pair to drop. Let's see what happened. Boom, if I click play, you'll see what's happened over the past 5 days. Perfect. We're seeing that steady decline and that continuous decline all week. So again, Nathan, congratulations to the guys that took this trade. Congratulations, a nice, perfect trade setup there. As you can see, price met up with target point B of a trend line, bit of a pullback. MA's rejected that climb back up, and we plummeted to the next key level for myself, which was a weekly support. So again, congratulations, guys. This is what our videos do. Hopefully you can take some experience from this. Hopefully you can take some education from this, because this is what we're about. We're here to help you guys. Now, going into this week, I'm going to break it down into 3 types of trades, starting with a short intraday trade. But ultimately, I'm always looking at the weekly time frame. Obviously, the end of the week now. Let's see what's going on for the week ahead. So CAD against the chef. It's a pair that I don't do frequently, but I found a great setup during the middle of this week. Now, as you can see, the end of last week, we had a bullish hammer. Great. You're going to perhaps see the start of the week being in that bullish momentum. So looking at this week's candle being a gravestone doji, going off the back of this hammer, we had that decline, or we had that rise upwards of around, I think it was around 50 pips. But then we've kind of had that rejection on that higher time frame of the EMA, and also perhaps a trend line which will be a bit more evident on a lower time frame, kind of close on a doji. So let me step down to show you guys what I was looking at on this pair in particular. So as you can see here, guys, from that bullish hammer last week, we kind of had 2 days of that continued increase in price, but we've then met this beautiful trend line here. So if I just step down to the 8-hour, this is where I implemented the trend line. Bear with me, guys. Okay, fantastic. So boom, what I started to see here was the rejection of this trend line, moving in between this moving average, and now potentially coming out of the moving average here, guys, the end of Friday, to perhaps start to see a decline on this pair. Simple channel trading on this. Third touch, I'm looking for a bounce to perhaps a weekly support or a daily key level down here, guys. So if I just quickly go back to the daily, I have a lovely shooting star. We may see a bit of consolidation towards the start of the week, as we have got this moving average just holding price up, stopping any bursts to the downside. For me, this is a high probability trade. I've had the nice tweezer top here, had a doji, but then we've had a nice shooting star just to follow up all this consolidation here. For myself, I am in this trade. I am looking for these key levels, as you can see, if you go back towards the 25th of March, for these levels to be met at the bare minimum. I am looking for that touch down the bottom here, guys, at 0.7384. So I always like to show you guys with the risk reward, placing the risk reward on the execution time frame. So let me just step down to the 4-hour. Perfect. Bear with me. So if you were setting this trade up, looking at a target of around 70 pips and putting my stop loss above perhaps the consolidation zone, consolidation zone, just to be on the safe side. By all means, that is a nice one set, well, just under 2-to-1 risk reward. That is with a pretty big stop loss for such a trade like this. But once again, the trade's there with the risk reward. Why not? Okay, guys. So that's the first target on CADCHF. So that's a nice short intraday trade. Something else that could perhaps give me that extra confidence on this pair for me to perhaps see this decline. I also have a counter trend line that I'm going to re-put back into this chart. Bear with me. Okay. So I had a counter trend line going across here. I think I've placed it on the 4-hour time frame. Perfect. So what I've done is matched it with 0.1, 0.2, extending my trend line off. I've had a moving average crossover in and around the third touch of my trend line, as you can see here on that shooting star. And then as you do, you have the break, you have a retest. We've actually had the double retest of the trend line, looking for those stop hunts. But as you can see, they are still swing lows. So once again, the short trade is still on. Nice counter trend line break, perhaps meeting up with 0.2 of the trend line. Again, meets up with our target zones, as was mentioned, at 0.7384. Perfect, guys. Let's move on to Euro Aussie dollar. Now, this pair is interesting. I haven't looked at this pair all week. So to be fair, it was kind of good to kind of get a second and fresh eyes on this currency chart. So my thoughts on this pair is looking at the past couple of weeks, we kind of had that bullish hammer there. And the previous week with a lovely bullish candle continued this week. Now, something to me, for myself personally, can I see any more movement to the upside, even though we've had a strong bullish weekly closure? For myself, I don't think so. Obviously, my opinion isn't the overall opinion, but this is just going off what my theory is. Ultimately, the Aussie dollar isn't the strongest at the minute, therefore we may not see fast movement. But I do feel like the euro has come to its penultimate for this currency pair in regards to a level of how high the price is going to head. Reason why I say this, let me step down to the daily. I'm going to talk to you on a short-term basis, looking over the past 8 months. We can see on this purple key level here, if I just put a horizontal ray, so I can get the price, around 1.634, call it 1.635. This is a beautiful daily key level that I've got on this chart. As you can see, we've had nice, beautiful rejections off this. Besides this manipulation day here, literally we've had great rejections off this price. Now for myself, this also works for a trend line break and a retest. Perhaps a decline is possible on this pair. Now for myself, looking at short-term targets, there with me, let me get my Fibonacci out. Could I perhaps see a retracement? Ultimately, for myself personally, if it does want to break to the upside, I'm still looking for that retracement regardless. So I've had this blue key level across here, which also at 1.6246. It also matches up with a 38 Fibonacci. For myself, I am looking for these ranges between the Fibonacci, between the 38 and the 61 to be hit as a short-term target. Depending on what sort of key levels I get around here, I am looking for this decline back towards the monthly support. Now, just to give you more of a reasoning to why I'm looking for that decline and not be trading it to the upside, is if we look back on this currency pair, you won't see the currency go, well, the pair go above 1.63500 since 2009. So if we follow this green line where the price currently sits at on market closure, if I just zoom out, bear with me, Okay, guys. So literally from the recession in 2009, this massive bearish market. The last time we was above this price, you're talking December 2009. Now since December 2009, the price has rejected 1.63500 every single time. Now, that's even on a daily time frame. So if we haven't even saw a daily candle closure above that level with some strong momentum pointing towards the upside since 2009, heavily unlikely we may get it. But once again, this is my opinion, my technical opinion. I do see a decline coming from this. So I see this as a strong ceiling, and I would be looking perhaps towards a decline towards my monthly resistance, like the past few months. We've had that kind of pull to the upside, and we've always come and retested my monthly support at 1.667. So this is going to be perhaps a one to watch over the next couple of weeks. But yeah, for me, going early into next week, it'll kind of give me an indication of my retracement. And then after the retracement, depending on what happens in those Fibonacci zones I was talking about, if we continue and break beneath this daily key level as you've got there, guys, apologies, let me step down to the daily time frame at the bare minimum. As you can see, if kind of had those rejections, those long wicks, you may be getting some stop points coming out. As I said, the Aussie dollar, the Australian dollar is kind of weak at the moment, so you may not see a major drop from the euro. It could stagnate, it could consolidate before it goes down. It may look for stop points and spike out some retail trade stop losses, but ultimately 251 pips is what I'll be looking for. Once again, after some good confirmation, perhaps looking for some evening stars, some shooting stars, some Marabozus, around this region of 1.63500. One to look out for, guys. Okay. Now, finally, just to wrap it up, I'm going to look at some a currency pair, which is Aussie against the Japanese yen. Okay, cool. Now, this one I'm going to do on a long-term perspective, well, looking at higher time frames, I should say. So I'm looking at the monthly here, guys. The reason why I'm doing this one, usually I don't really tend to trade really long-term targets. However, I've had a lot of students, a lot of traders discuss with me over the past week how they would trade if they can't tend to look at, well, they can't look at the chart every day, for instance, because of their working related responsibilities, children, just life in general. So I want to show you a perspective of how to trade from a higher time frame. And I know Nathan likes to do this quite frequently, but also something that I'm adding into my currency trading as well. So as you can see, the end of May was a very, very heavy bearish candle. A lovely Marabozu coming out of a few months of consolidation. Now, as you can see, every time we've come down to these levels on candle closures, they've always been wicks and rejected and come back up toward my weekly turquoise line there. Now, last month, we didn't kind of reject it. We kind of had strong candle closures where the market was full of sellers. So every time we've had a candle close anywhere around my monthly resistance, as we can see here, with heavy momentum and not crazy wicks like this, you tend to see the next few days of that week be very bearish, meeting the next key level, which is here, in this instance, a weekly key level at 71,900. So, for example, nice wick there before it shot back up. Obviously, that was a crazy wick there. But once again, these are nice wick areas that price does like to test across a longer period. Now, looking at the week, well, June so far, if we have a look at the weekly time frame, guys, you can see that a bit more clearly. Whereas last time we was testing these in 2016, we was rejecting it, having tweezer bottoms and then starting the upwards trend. Here, we're actually having bearish engulfing candles at the end of this week instead of rejections. So to me, that kind of states to myself that this pair isn't done with the bearish momentum. I think it wants to find those long wicks like that we saw on the weekly time frame, so on the monthly time frame. So as I'm saying here, just on a short-term basis, these wicks down here, especially this one around 72,500, they are big possibilities of being hit. Now, on an entering purpose, for myself, I would still wait for confirmation of a break underneath my monthly resistance at 74,500. I'd perhaps be looking for a break and a retest of it before continuing down towards 71 or 72,500, I should say. But ultimately, I do feel that this pair isn't done on a downside momentum just yet. So just looking from a higher time frame, just to put some key levels in for targets. I'm literally just going to get my rectangle tool, look at some wicks across the bottom here, and just draw a nice zone for the pair to be hitting. Okay, cool. Anywhere in this purple region here is what I'd be looking for before a monthly key level. Now, you could also, on a long-term perspective, see the overall trend of this chart. So we are trending downwards. You can put a nice Fibonacci in on a long-term perspective. So point A being the top here, and then the swing low there. Point B, we had a retracement to the 50 Fibonacci retracement zone, also getting rejected off the trend line across the top there. We did have point B being met again. Now I am thinking this pair will definitely look to meet point B for a third time. Once again, as you can see, point B matches up with that region that we're looking at. Now let's look at projections in regards to targets on this pair. So this would be a lovely long-term swing trade, and let's have a look what we're looking at. So we're looking at a good 200 pips there. You could have a stop loss above the consolidation zone here. It is a very big stop loss, or you can go down to lower time frames to find that perfect execution. But ultimately, for myself, I would be waiting to see what it does off this monthly resistance. It may want to come retest these levels here. Bear with me. So it may want to retest and bounce off there before plummeting down. But I do feel that on a long-term perspective, this region at the bottom could still be met. From looking at the RSI indicator, you could say this currency pair at the moment is currently oversold. So yeah, we may see that retracement, bounce off act as a ceiling before crashing down and plummeting underneath the monthly key level. So that's just something from a long-term perspective. As I said, I've had a nice bearish week. So for myself, I would be looking for a break of that monthly resistance towards the downside of a target of 172,500. Guys, 3 currency pairs for you there on a short-term basis, on a daily swing basis, and also a weekly, monthly basis. Hope that was good for you guys. We'll see you again next week. Stay pipping.